Hello traders, this is Joanne with In Forex. Welcome to our Forex news broadcast for Wednesday, May the 14th, 2008. Headlines out of Switzerland this morning said dollar rallied on better than expected U.S. retail sales. The dollar rallied broadly on Tuesday after a report on April retail sales beat forecast and supported views that the Federal Reserve will probably stop cutting interest rates next month. Retail sales increased 0.5%, more than double the increase that economists had forecasted. That followed a 0.4% pickup in March, suggesting that the U.S. consumer remained resilient despite the housing market. The data bolstered the dollar as consumer spending accounts for two-thirds of the U.S. economy. Analysts said the dollar also had been boosted by a government report showing a slight rise in the U.S. import prices in April, which pointed to growing inflationary pressures. The market was little moved by Fed Chairman Ben Bernanke's comments that the central bank's liquidity measures had helped relieve strain in financial markets, but that the recovery process remained incomplete. The euro-dollar dropped yesterday to a session low of 154.31 and was last trading around 154.71. The dollar-yen jumped to a session high of 104.92 and traded last around 104.76. The pound-dollar dropped to 194.48. The dollar Swissy rose to 105.24. Short-term interest rate futures, which track the market's expectations for Fed policy, showed an increase to 92% chance that the central bank would leave benchmark lending rates unchanged next month. The Fed funds target rate has been lowered by 325 basis points since mid-September 2007, undermining the dollar's appeal to investors seeking higher returns. San Francisco's Federal Reserve President Janet Yellen said on Tuesday the current level of U.S. interest rates should boost the economy in the second half of the year. The euro was under pressure after a report of write-downs related to the U.S. subprime mortgage sector. This indicated the eurozone is not immune to the problems in the United States, and analysts are convinced that the growing signs of a slowdown in the economic activity in the euro area will force the European Central Bank to cut interest rates at some point this year. In the Asian session, the dollar continued to hold as Asian currencies came under pressure. The emphasis yesterday was on the pound and the Australian dollar. Both declined versus the greenback, comforting the latter's newly gained vitality. U.S. dollar's vigor also took its source from the continuing rise in the price of crude oil, which came very close yesterday within the reach of $127 a barrel. The uncertainty about the price of crude has attracted many investors to take positions in dollars. The effect has been to drain capital from other currencies. In Australia, the trigger was the weaker than expected wage price index, which rose to 0.9% in the first quarter. The Aussie climbed before coming under pressure and closing lower at 93.71. Around Asia, the currencies faltered. Whether in Malaysia, Singapore, Thailand, and even India, the currencies fell versus the dollar. The decline was attributed to the lackluster performance of the Asian stock markets, where financials came under considerable pressure, along with the tail-end effects of the earthquake that has hit China. In Europe, the fall of the pound was also notable. It was a noxious mix of data showing slowing economic pace along with rising prices. There was the initial rise of the pound as the increasing pace of inflation rendered a rate hike more probable, but the rally ran out of steam as investors put more emphasis on the poor showing of the economy that would warrant a fall in rates. The dollar support was also internally driven. It is assumed by many analysts that the period of declining rates is over. There are also signs that the Fed is tempted to intervene more rapidly in the markets before any burst of a credit bubble. This is going against the beliefs of Greenspan, who thought that the monetary policy could not be of any use until the bubble has burst. The dollar's new gain is nonetheless still wobbly. Any newly released data that would intimate a slowdown could bring about a turnaround in the trend. There was some hint of this yesterday as financials in the New York Stock Exchange came under pressure as more downgrades related to the subprime crisis were announced. 6 of the 10 sectors managed gains, led higher by energy at a plus 1.2%. Major news out on the day was the retail sales, showing a gain of 0.5%, above the 0.2% that was expected. Gasoline sales were actually down, so they're saying that crude price inflation was not the cause for higher spending. I'm not quite sure I understand the logic behind that, since when I fill up I may be filling up less, but I'm paying 3 times the cost that I was paying before. That concludes our news for today. We hope you're finding this beneficial to your trading, and we thank you for viewing. Before we sign off, we would like to invite you to join us at our website at www.succeedinforex.com. There you'll find information about our Traders Training Center, and also a link to our Yahoo forum, which is also called Succeed in Forex. We hope you visit us there soon. Have a great day of trading. Until we see you again, happy pipping.